Hello, everybody. This is Brian Terry with the Conservative Covered Call Trading Group. I wanted to share with you a trade I did about a week or so ago, and it was really a trade that didn't work out like we planned, but it ended up being a profitable trade. So the trade was in ABBV, and it was a dividend capture trade, and we ended up adding a protective put to hold it through earnings. So here's a copy of the chart. And you can see here where the arrow was is where I put the trade on. So it looked like it was starting to kind of move up. It didn't end up working out that way, but it still ended up being a profitable trade. So here's a copy of the actual alert that I sent out, and this was on 7/13. We entered the covered call. I bought the shares at 152.80. I sold the 729 145 calls and collected $8.10 to do that. ABBV went ex-dividend the next day and paid $141 per 100 shares in terms of a dividend. And as you guys know, this is probably one of the better dividend capture stocks out there. So including the dividend, the return would have been about 1.2% in 16 days with 5% of downside protection. That gave us an annualized return of about 27% with a break even of 144.70. So ABBV actually had earnings on the 29th. So I didn't want to hold just the covered call through earnings. So what I ended up doing is on the 28th, I bought a protective put. So I used an 819. I bought the 148. I sold the 143 and paid $2 per contract. So ABBV announced earnings on 7/29, which was that Friday. The stock went down. So on the 29th, I rolled my 145 call out another week and down to a 143 call and received another $1.21. So on 8/5, the next Friday, I closed my put spread for $6. So I paid $2.06 for it. So each one made $3.94. And then I closed my stock and covered call for $139. So here's the kind of the math for that trade. So I bought the stock for $152.80. I sold the first call for $8.10. I received the dividend of $1.41. I rolled and collected an additional credit of $1.21 for the second call. I paid $2.06 for the protective put spread. I closed that protective put spread for $6, and then I closed the stock in the last short call for $139. So including the dividend, the trade made $86, which isn't great. But if you think about it, we were still able to make, a 0.6% return in 23 days, while the stock actually dropped 9% in value. So I thought it was an interesting trade where the stock moved against us. We were able to use an in-the-money covered call to collect the dividend, buy a protective put to hold it through earnings, and still make a profit, even though the stock dropped 9%. So that's the kind of trades we do in the Conservative Covered Call Trading Group. Here's a little bit about that if you're interested. It's a private community. We're a small trading group, and I send out a daily live trade every day. We do 3 member webinars every week. I do a full watch list. I send it out Sunday afternoon. There's a chat room and a scorecard that we keep track of how the market is doing. So I hope you found this trade interesting and helpful. If you guys do have any questions, I can be reached at conservativecoveredcalls@gmail.com, or our website is conservativecoveredcalls.com. So thank you very much. I hope you enjoyed this, and we will talk to you soon. Thank you very much.